Listen-only mode.
Hi traders, this is Adam Howes, Senior Account Manager with Forex Capital Trading, hosting the webinar on the Daily European Open for this Friday, the 18th of the 8th, 2017. Just a short general advice warning before we begin. The following education session is not to be treated as personal advice. Forex trading involves trading risk capital. And Forex City provides general advice only that does not take into account your personal needs or circumstances. Just looking ahead to risk events for this evening. The main one to focus on, or the two, are the core consumer price index for the Canadian dollar coming up at 22.30 tonight, year on year July, and also the University of Michigan Business Confidence for August. This index here kind of measures a general sentiment of business confidence from the University of Michigan, precisely at 12 o'clock tonight, Australian Eastern Standard Time. But the main mover on the market on the Canadian dollar will obviously be the CPI, generally higher than expected. Inflation figures usually place pressure on that respective bank of Canada, that is, to raise interest rates in line with increased inflation. So if we see a better than expected number, it may hint at another rate increase, with a little bit more urgency. So the Canadian dollar would be expected to accrue in value, obviously against a weaker US dollar on a pair like the USD CAD. It's a bit of a quiet night overnight on the market following the Fed announcement on interest rates. And also looking, sort of ahead to most of the major pairs today, we're looking at, relatively quiet days, a little bit of bearish pressure happening on the US dollar at the moment, just following the political risk with Trump's comments, Trump's sackings recently of his core government, and as well as the North Korean conflict, which has subsided but hasn't sort of gone away in any great detail. The main stories on the market, I think, to pay attention to today, overnight, obviously we had, conviction for another US rate hike before the end of the year fade after the Fed's July meeting, showing policymakers were increasingly wary of recent softness in inflation. We're also having a look at the USD index tailing off a little bit against most of the majors as well. Global stocks really were hit by doubts over Trump's economic agenda. So most of the global stocks, the Dow, the Nasdaq, etc., were mostly lower last night, as sentiment was dampened by worries over US Donald Trump's ability to implement his economic policies after he disbanded two high-profile business advisory councils. We looked at the stock markets across Asia being relatively mixed, despite the lessening tensions from North Korea. And in Europe, the shares were also lower in the mid-morning trade, with indices in the German and French markets on track to snap up a three-day winning streak. One of the biggest movers on the market at the moment, industrial metals, extend monster rallies this week to fresh multi-year highs on expectation of China's reform of its metals industry, which will curb supply against a backdrop of robust demand. So zinc prices in London surged to their highest in almost a decade, whilst aluminium and copper hit their highest since 2014. And palladium prices also rallied to a 16-year high as well. So that was generally seen as sort of, quite robust for the industrial metals sector. So looking ahead tonight, we've got the major pairs which we focus on: the AUD, the Euro, the Pound against the US dollar, USD against the Yen. We've also got the GBP, JPY, so we'll just alter that here. Have a quick look at that. Crude oil, the gold, and also the S&P ASX 200. So generally speaking, we've got a nice little, one of the major pairs sort of my eye is drawn to at the moment is obviously a pair that moves quite a lot, the USD JPY. This technical pattern happening underneath the trend line at the moment, underneath the pivot point, is suggesting maybe a double bottom in the market could be formed at around the 108.90 level. So we were bearish on that last night, just from the emergence of the daily candle being bearish also at this time yesterday. So again, a double bottom could be reached at 108.90, and if that happens, that's a good level of support, potentially for a retracement, but also we might see a continuation of that downtrend again on political instability in the US Trump government. But there might be a resurgence of tensions between North Korea and the US as well. But the worrying thing for the US at the moment, I think, is a persistent low inflation that has persisted, and we saw that obviously affect the Fed's policy meeting in terms of implementing interest rates with any great urgency. So the urgency of interest rate increases for this year was downgraded from a number of announcements from the FOMC on Wednesday evening. And that's continued to sort of place pressure on the already bearish US dollar. So trading central targets today on the US dollar against the yen are obviously a sell. We're looking at a daily chart, but just giving you some figures here for the US dollar against the yen. We've got bearish sentiment, or the downside prevails, with targets of 108.70 and extension, and we're currently trading around about the 109.34 level. So it might be a bit of a good way to pick up, a handy 60 pips coming into the market at that level where it is now. Similarly across the board, we've got a reversal on the Aussie dollar. The Trading Central are coming out with a key resistance on this pair at 79.15. So essentially they're saying when the key resistance happens in the market that we see a top in the market forming at that level, and we expect more bearish pressure to resume to around about the 78.50 level. We've also got the Euro US dollar. We've got short positions preferred on daily text today, and also on the short positions on the euro and also on the pound against the US dollar. Okay, so they're expected to sort of have bearish sentiment as well. Correspondingly, gold, one of the other major pairs in which we correlate against the US dollar, the bias has remained bullish on the gold to further levels of 12.97 in extension. So that could be a handy way to sort of pick up, sort of a $10 move in the market as well. Just in relation to the USD CAD, we'll have a look at the price right now prior to that announcement on inflation coming up at 22.30 tonight. Okay, USD CAD. So technically, we've held in a pretty steady bear pattern at the moment. The price really adhering to this downward trend line at the moment. A retracement began around about the 28th of last month. Then we hit another top in the market, and again the US sort of tailed off on the FOMC announcement 2 days ago. A lot of analysts have sort of indicated that the inflation expectations of 1.2% are quite modest. Any figure that's higher than that, remember that the CAD actually hiked up their interest rates to 1.75% recently, so anything higher than that number would actually spell, a further spike downwards for the US dollar against the Canadian dollar, placing more pressure on the Canadian bank to actually raise rates. So a higher interest rate attached to the Canadian dollar would actually improve its value and drive this pair down. So that's one trade to look out for. Of course, you can place entry orders on those sorts of announcements as well when they come up at 22.30 this evening, Australian Eastern Standard Time. So for the time being, if you need any insight or further help into those economic announcements, or if you need any sort of actual trading setups assisted, we're happy to help you. Give us a call here at the trading desk, and we'll get you your respective account manager to get you on the right trades. But for the time being, thank you very much for your attendance. Have a great weekend, and we look forward to seeing you shortly. Thank you very much.